Hi everyone, I'm Ken from Crypto Trading. Twice a day, 7 days a week, I examine the price action of crypto. I share my experience as a full-time crypto trader to assist you to be more of a financial blessing to yourself and those you love. If you're new, welcome, and welcome back to our regular community. Everything I do for you is free. Let's run the numbers. Bitcoin is currently trading at 33,300, down about 2%. Ethereum is 1858, down around 6%. We can see USDC, DAI, and BUSD are all red. Now they just turned green. You gotta love real-time charts. When they are red, when a stable coin is red, it means that money is flowing out of it into the crypto. When it's green, it means money is flowing from crypto back into that stable coin. Basically, people translate between a particular crypto and a stable coin in and out, basically. Let's do a quick analysis of sentiment. FISEV and NYDIG, positive. El Salvador giving away money, positive. 3.6 billion in Bitcoin vanishing, that's not positive, that's very negative. Retirement, putting retirement accounts in Bitcoin, very positive. Elon and Jack having a tweet storm, that's pretty neutral really. Could be mildly positive, mildly negative, it's really hard to know. 7th of September, Bitcoin's law in El Salvador will be passed. Jack and Elon again, El Salvador again, Bitcoin theft again. So basically kind of five positive, 2 negative, and 3 maybe neutral. So we could say that there's a slight positive bias. We always start by looking at the market context because we know that dictates the trend. This is from Rule 8 of my personal trading rules, which I've accumulated over many years. Every rule is unfortunately learned by significant loss. So I share these rules so that you don't have to lose money. Let's look at the KS model. The KS model, we're in psychological sunshine. We're in the bull market above the previous bull market peak from the last cycle. We're on track for higher prices. That's the overall trend. How do we know that overall price is increasing? This technological adoption curve from GMI is exceptionally good. It is showing that cryptocurrency adoption is growing 80% year on year. That is much faster than the internet. In fact, crypto is the new internet of money, and it will change the world fundamentally. Everything about this channel is aimed at helping people to become a financial blessing to themselves and those they love. There was a very nice comment from Steve today. Pink Pank and Christoph gave comments yesterday, but I just want to put them here because I think that's also very nice. So Steve said that he and his wife are teaching their 3 children ages 8 to 12. Can you imagine these kids when they grow up? They're taking Steve and his wife are giving them $200 each to push across Bitcoin and Ethereum. This is outstanding parenting, just beautiful. I can imagine when these kids, if they just left it in Ethereum and Bitcoin, when they're 20 or 18, they're not going to just buy a car, they're going to buy a house or maybe a Porsche and a house and a yacht. It's incredible. Well done, Steve. And well done, Steve's wife. It's really beautiful. And Christoph said the same basic thing. He's sharing the videos with his 4 kids. It's just beautiful. And Pink Pang sharing it with her daughter. It's just awesome stuff. Well done, community. Let's turn to crypto total market cap. This is really the fingerprint of every crypto in the market because absolutely that is what it is. We can see that there was a support. It's just recently been broken. There is a downward level of support and a structural level of support which should provide a bounce. it's really important that we get above this previous high at around 1.401 trillion. That's important. Currently, total market cap in the crypto space is $1.318 trillion. Let's turn to Bitcoin technical analysis. At the last episode, episode 80, I said it would be fair if price came back and tested around this particular level, even as low as 32,414. Bitcoin is currently trading at 33,353 approximately. We're looking for a consolidation because Bitcoin has to take out the 35,000 mark. I am not surprised at all by this price action. What would happen? The shorts know that 35,000 is a key psychological level. They would be placing a lot of orders there to put downward price pressure into the market. So this actually makes a tremendous amount of sense. We need the longs to accumulate power to get through that 35,000 and transform it to support. Bitcoin is currently hovering around its support level of 33,588. There's support below at 32,869 and major structural support at 32,414. We have resistance at 34,267 and of course at 35,000. Some community members have asked me to go through what the difference is between structural and normal support and resistance. Structural resistance or support is very strong. It has a very powerful price memory. Normal or light, you can see that this touches on this particular support line. It's support, but it's a long way away, and it's very hard for price to be supported by this line. But just as an illustration, the more times a particular line touches price action, the stronger it becomes. Please note that there's many ways that you can draw your support and resistance lines. In technical analysis, you're an artist, and it's important that you just keep consistent with how you draw your lines. You don't want to draw a line one way, for example, a support line, with one particular perceptual concept in mind, and then draw another support line that violates that idea. You always want to keep consistent. If you don't, your lines will be confusing and you will probably end up losing quite a bit of money. Consistency is really key. From this action, what we're seeing, this downward price pressure, we would be expecting the shorts to be ramping up their positions, especially because they think 35,000 is a psychological level where a lot of people will be selling. So they will want to take advantage of that. Let's see what's actually happened. As we expected, shorts here in red are increasing their relative power. And we also notice that longs are too, but they're not increasing it at the same basic differential rate. So that means the shorts are winning. Now, what is happening with liquidations? Is this a big liquidation event? The size of liquidations is always important. If it's a low number, say 300, 400 million, up to about say 600 million, that is a light day. If it's over around the 1 billion, that's more significant. If it's over 1.5, then that matters. Let's have a look at the liquidations. Okay, we can see here that 337.5 million is really, it's under light. It's light. Over the past 24 hours, 71,996 traders were liquidated. If we look over the past 12 hours, 66% of liquidations were long. And we can see the longs getting liquidated in here. It really makes a lot of sense. When we look at the price action, we can actually tell this anyway. A lot of trading and investing is really about interpretation. I just pop these things here just for a bit of fun actually. What do you see when you look here? And what do you see when you look at this picture? Do you see a butterfly landing on a flower and these beautiful petals? What do you see in here? Do you see birds in white? Do you see vases in black? What do you see here? Is that a woman looking across her shoulder? That's her hair. This is her eyelash, nose, chin. Do you see that? Or do you see an old woman with a big nose, a mouth, and something like that? Do you see here that this could be a stylized woman? It's very interesting, isn't it? Interpretation is critical. When you're in the markets for a very, very long time, you try to see everything that you possibly can. You see both pictures. You don't try to fit your reality over either picture that you see. It's incredibly important when it comes to drawing support and resistance lines and interpreting patterns. Dave has been very, very good at bringing Wyckoff into the community, and he's always been interested in me discussing it, and I've always actually wanted to, but I've always run out of time. Sorry about that, Dave. And Tommy recently commented on the Wyckoff accumulation phase matching the price action. And we've got a lot of people inside the community that are sort of a little bit divided. Does it play out? Does it not? Dinesh did a little bit of analysis here, and there's a good looking overlap. It can't be denied. So what is actually happening here? Maybe before we get into Wyckoff analysis, it would be interesting to just revisit psychological safety. We know that when there is extreme optimism or extreme greed in the market, people FOMO in because they have a fear of missing out. So they accumulate, and they're basically manipulated into doing that, and the institutions sell off. But the institutions want as much as they can get. They extract every cent out of other people that they can get. So they FOMO the price up again and then liquidate it and FOMO it up and go short. It's very interesting. It's helpful to know the price is negatively biased. It's negatively biased because there are a lot of people shorting the market. That's really why. This particular video, I believe, is one of the videos that started the Wyckoff concept off in crypto. I know that there's a lot of people that talk about Wyckoff in crypto. This has been circulating as the source, but I know there are many people who talk about Wyckoff. What happened in this particular video, this author, this YouTuber said, look at this. This schematic is playing out exactly here. Now, one thing that I do when I do my analysis is I reconstruct everything from first principles, which means I don't care what any chart looks like, and this is a good place for you to be in as well. What I really care about is that it actually matches price action. Now, what am I meaning by that? So it's very helpful to understand who Wyckoff was. Richard Wyckoff, 1873 to 1934, was editor of the Magazine of Wall Street, which had over 200,000 subscribers. That's pretty impressive. He was a very caring person, and he wanted the average investor to understand how big institutions worked. He observed J.P. Morgan and Jesse Livermore greats at that time, like the Warren Buffetts of that time. And he saw what they did, and he broke it down because he really cared about people, and he wanted people to understand the psychology of the market. A community member said that everyone needs to understand Wyckoff analysis. I couldn't agree more. It's really, really important for the psychological aspect of the market. I think one thing to keep in mind, Wyckoff analysis is all about trading ranges. That's a range of prices that either break up or break down. That's the central tenet of Wyckoff analysis. This is a trading range up here. It's got upper and lower boundaries at the top and upper and lower boundaries at the bottom. When these break up or break down, that signifies a move. Wyckoff was very interested in trading ranges and how they were created and how they broke down a lot of things. I mean, incredibly good work. Let's get into the technical side of what Wyckoff analysis actually is. As you probably realize, it's very psychological and it's really focused around the investor psychology meeting institutional manipulation. Now, what does all this mean? You notice these dotted lines that I've drawn in here? They're not part of Wyckoff analysis. They really are nothing more than trend lines to see where price moves to. But I'll explain that in the next video. This is really just about part one. If we don't understand this phase, we don't understand the next phase. I think a lot of people get very stuck in terminology. As a former lecturer in statistics, I'm really against that. I think people need to feel the knowledge in their bones and understand what it means. If you do that, you can apply it. You notice that there's phase A, phase B, phase C, phase D, phase E. I'll explain what those are in a moment, but I just want to explain the psychology of this fear and greed cycle playing out. Now, what does this mean? This chart, you notice all of these values. Those values are exactly on this chart. I reconstructed this YouTuber's analysis. Every point, every line, I wanted to understand what was going on. And I wanted to understand what his thought process was and how I could interpret how he's seeing the black and white picture, if you like. What we look at in phase A, this is really about an offloading of supply from institutional investors to the public. The institutions advertise the price by bidding it up, bidding it up, bidding it up, with the sole interpretation that they're going to short it when things are exhausted. It doesn't exhaust immediately. These small exhaustions, they want a big exhaustion like what that particular YouTuber drew in here. I've tried to recreate his work as accurately as possible. What is happening here? You see this thing called a PSY. What it is the dampening of the trend. I can leave that up a little bit longer. It's more important that you understand what these concepts mean rather than understand this definition. What this is about, institutions have attracted the price in because of these huge increases they're advertising. Now they're testing if the demand is in the market. So they're trying to bid down the price. They're trying to suppress the uptrend, which sounds almost sort of counterintuitive in a way, but that's what they're trying to do. So this preliminary supply is the FOMO offloading by institutions. Now, what's this thing, this BC? The BC, I'll just move it over here so you can see more effectively. The BC is a buying climax. That's when they maximize all the FOMO to pull people in, and they basically fool the public to buy at the top or near the top. Institutions feel that this is a pretty good place to start shorting when the actual momentum starts to come down. They also know that these moves are generally followed by other moves, so they don't give up on the buying climax. The concept of the buying climax, it sets an area of the trading range. This is what's really important to Wyckoff's analysis here. Now, what happens then? The institutions start offloading with increasing volume to short the price down and down and down. The investors, the street that comes in, it can't believe it because the news is so good. So there's this thing called an automatic reaction, which also hammers in a low of the trading range. This is what these things are actually for. Don't worry about the words, worry about what it means. Wyckoff was trying to figure out where the trading range could appear. So with this in mind, after this particular automatic reaction, maybe I'll just move this one over so again you can see better. With this automatic reaction, what happens is people just can't believe that this thing is coming down. It's going up. Lamborghini's in the driveway next week. So what do we get? We get a secondary test. What is a secondary test? There's a lot of words in there. I'll just explain it. So a secondary test is when the price flips up, but it doesn't last, and it collapses down because they're just offloading, selling to drive. The shorts are going up. They want to drive the price down. What is this thing? It's a sign of weakness. So that is hammering in that lower level of the trading range. Remember, Wyckoff, trading ranges. That's what he's really about. How the price behaves inside the trading range, how it moves from one trading range to another trading range. Then what happens? Well, they want to get more and more out of the street. So they bid up the price again, all the time knowing that they're going to short this thing as much as they can. This is called an upthrust. It's trying to see how far they can get the price up. The higher they get the price up, the better they do at shorting. So this is all shorting behavior, but they're trying to get it up to a position where they get the absolute maximum. Now, what is this thing? Let's have a look. Upthrust after distribution. Okay, that's a little bit bizarre. What does a UTAD mean? It means it's a fake out. It's a bear trap. Sorry, a bull trap. It's the price has come up, but it's reversed. It's tried to get up again. It's come down. It's collapsing. That actually shows us that this top end of the trading range, this horizontal resistance, support, didn't hold. It became resistance. Now it's collapsing down. So what's this LPSY thing? Last point of supply. What does it mean? Last point of supply, you notice how the price comes down and the bulls try to drive it up, but it doesn't go up because they're running out of steam. The supply into the market, the selling into the market is too extreme for them. The institutions have figured out that they've won already up here. So they push. Now, this particular YouTuber, I said, I just tried to create as faithfully as possible what he actually did to understand that method of thinking. If you don't understand this first part, the next part that we're in will make no sense. And it's not about remembering what terminology is. It's really about understanding the psychology that underpins. Now, what the YouTuber said, he believed price would come down, collapse, test this sow. What's a sow again? It's a sign of weakness. It's the bottom of the boundary of the trading range. You see two bands here? This is really good for you to know. Trading ranges are very important. He believed it would come down, test it, try to get above it, fake out, get below it at a lower level, try at a lower level, which shows compression in price, and then just break down. Now, there's 5 phases across here. Just before we get into these 5 phases, just think about if you are in the market right at this particular point and you've seen this schematic play out, like he said, textbook Wyckoff distribution. You've seen this play out. what would you do? Would you abandon all hope and say, wow, this thing is going to 5,000? It's a really interesting question to ask yourself. There's no right or wrong answer. It's just an interesting question. So let's get back to these phases. What is phase A? Quite seriously, it's offloading supply. It's the negative, it's the advertising of news which the institutions are going to use to lower the price. I just wanted to tell you the department store analogy. It's like the institutions have a department store, and that department store sells something. And by making whatever it is more and more and more expensive all the time and publicizing how good it is, you just need to go and buy it, whatever it is, and you will buy it at any price. The higher, the better. Now, we know that we traditionally would not do that. If you can get something, if it's a standard thing, at some other place, you would probably look for a better bargain. But in the markets, people get sucked into this all the time. That's why we always say people tend to buy at the top and sell at the bottom. If you've ever done that, you understand the power of crowd psychology. What happens here in phase B? Phase B, the bears start to pull the rug. They're testing, right? And they're starting to get somewhere because they see a lower high. A high, this is a high, but it's lower than that one. That's a lower high. So they're trying to initiate their shorting positions. They're increasing their shorts. I think this stuff really, really helps you to dig deeper on the shorting behavior. I hope this is really helping. What happens up here? Well, this is an optional thing. This doesn't have to be there. Phase C is optional. This is what's called an inverse spring or a bull trap. This is where it basically marks an exhaustion phase. According to what we're fitting here, according to this person's analysis of the Wyckoff distribution. So this is all about a fake out. Now, what's phase D about? This is what happens when we cannot make a higher high. If price came back up and made a higher high, well, this distribution would fail because it would be showing strength. That wouldn't be exhaustion. But there's so many reasons why these things happen in the markets. It's really important to understand. So at this point, all the pressure is mounting. The shorts are ramping up. They think they're going to win. What do we know about psychological safety? Psychological safety for longs, psychological safety for shorts. We know a few things about that. We talk about it every day, every episode. Sometimes things don't work out exactly as planned. We're witnessing this psychological behavior. What is phase E? Phase E is when the big sell-off begins. It just collapses. Okay? This is basically what this particular YouTuber put together. And it's great to make people more aware of different things in the market, and to teach people about psychological crowd behavior is really vital or good. I just wanted to raise rule 132. Every rule that I give you, I've paid for in blood and money. When I say something, it is not to do anything other than to try to keep money in your pocket and not see that you lose money. We see what we expect. When I first began trading many years ago, I looked at all the patterns, I studied all the charts, I had all the indicators. I had so many indicators. I couldn't even see the chart when I started. How many indicators do I have now? Basically none. What happens? We see what we expect to see. It's very dangerous to think that price and markets will fit our version of reality. Markets are uncontrollable. Every market is uncontrollable. When you have to be right, you're going to make a loss more times than not. You really have to be really flexible. And that's like in life as well. We always need to be flexible. The more flexible we are, like a tree in the wind, if it can sway with the breeze, it's not going to snap. If it's fixed, enough of a wind will crack it in too. That's like what we need to be like as professional traders and investors. Let's get into the technical analysis side. Let's have a look at Ethereum. Ethereum is currently trading at 1853 at support. It has resistance above it at 1909 and resistance above that at 2020. It has support at 1744. I just wanted to show you the crypto total market cap. We looked at it previously, but do you see this structural support coming down here? It's important when you look at other coins to know that the entire crypto market is coming up to a structural support level. If you don't look at this and you just look at your coin, you may think, oh goodness, this is just going down and down and down. It's going to collapse. But that is not the case. Structural support is a strong support. It's just really helpful for you to know that. Let's have a look at Binance Coin. BNB is currently trading at 288.71. It is actually at support right now. It has a lower level of support at 278.17 and a further level of quite strong structural support at 264.75. It has psychological resistance at 300 and then a level of resistance above that at 309. Keep in mind that the entire market has a structural support line running through it. That's why we look at total crypto. Let's have a look at Cardano, ADA. ADA is currently trading at 129.06. It is at support and supported by this top line as well. Underneath, there is a strong degree of structural support here at 124.11 and at 121.27. It has resistance above at 133.43 and higher than that at 140.06. Let's have a look at XRP. XRP currently trading at 63.11. It is realistically at support right now, not uncommon to all the other coins. We know that it has resistance above at 65.60 and above that at 67.40. It has support below at around 60 cents and quite strong support below that at 56.94. The reason we look at the total crypto market cap is because we need to know how the support and resistance lines are functioning across the entire crypto market. We know that that structural support is below XRP as well. Let's have a look at Doge. We've seen that Doge has been maintaining its upward support very well. It's currently trading at 24.969. It pierced up over that resistance to attack its structural resistance at around 29.138. Couldn't get there, so it's backing off to a fairly reasonable support level where it's currently trading. Doge has support at 23.393 and below that at 22.200. Let's have a look at Terra, at Luna. We can see that all of the cryptos behave in exactly the same way. That's what actually makes crypto such a cool market. Luna is currently trading at 5.212. It has resistance above at 5.586, support below at basically $5. Let's have a look at Polygon, Matic. We can see that Matic was exhibiting a lot of strength previously, has sold off quite heavily. We could say that Matic has become problematic. Sorry, had to put it in. Currently Matic is trading at 109.747. it has a lot of support, structural support below it, 3 levels of structural support at 1,05585, at 1,01203, and at 0.95360. This is not bad. We know that the entire crypto market is approaching a structural support line. That's why I take you through the total crypto, to help you to understand what everything is doing. Polygon has resistance at the 1.18745 mark and at the 1.26610 mark as well. Let's have a quick look at VET. VET is trading at 73.96. It has support below at 68.18 and resistance above at 80.45. I wanted to give a shout out to Andreas, Bitcoin Istador, what a cool name, David, Maz, Scompy, Queen Dystopia, Foundation Alberti, Choosing Why, Scott and Glennis yesterday. They provided very, very good information. CoinGecko, lunacrush.com, platform.altfins.com, Sentiment Feed, Mazari.io screener. There's a lot of fantastic resources here. Please have a look at this slide. I think it will really help you out. I will include these in later videos. Thank you, everyone. Let's go to Binance Derivatives. What we're trying to do is see into the engine of crypto. 24-hour trading volume is 63.345 billion. 24-hour open interest is 5.5 billion. Let's have a look at the change in the price of the contract in the past 24 hours. They're turning negative. Now, what does this mean? It means the shorts have come in and they've regained a degree of control. But we know the entire crypto market is approaching structural support, which gives us some degree of confidence. We can see that there's still good gainers. See a coin at 9.9%. That's good. That's showing positive interest. Not too many though at the moment. I'd like to do a quick shout out to Benjamin K. He was asking, what do you mean by sharp angles reflect? So let's have a quick look at what that could mean. When we say sharp angles reflect, we're looking at this sort of thing, Benjamin. We're seeing price always moves in a wave, and the sharper the angle, typically the sharper the reflection. You can see, especially down here, there was a reflection in here. We see a very sharp angle. These generally are unsustainable by nature. They tend to reflect. Let's go back a little bit. See the sharp angle reflecting, sharp angle reflecting. It's a very powerful trading tool. Very good to get your head around. I hope that helps, Benjamin. Let's have a look at market cap. Top 7 are Bitcoin, Ethereum, Tether, Binance Coin, Cardano, Doge, and XRP. Top 24-hour gainer, Celo, Quant, Sia Coin, SHIB, Doge, CRO, and Nano. Greatest losses, Bake, Phantom, Clayton, Kusama, Internet Computer, HBAR, XRM, Monaro. Let's go the other way. Top 7-day percentage gainers, Quant, Celo, stablecoins. Let's go the other way. Greatest losses, Kusama, Near, Internet Computer, Bake, Amp, Rune, and Neo. Always keep your eye on these little fingerprint type graphs to see if things are crossing above support or resistance. It's very, very helpful. I do these videos to assist you to be more of a financial blessing to yourself and those you love. I hope you found the content useful. Please say hi and let me know where you're viewing from, and if you have any questions. Our community is really helpful and supportive, and I always do my best to respond too. Many times I'll reach out and ask the community questions. You can do that too. We're all working together to maximize the financial blessings in each other's life. If you would like twice daily updates 7 days a week on price movements in the crypto market, please subscribe on YouTube and follow me on Twitter. Crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.